Okay, so let's talk about another application that you can add in. So another great one that you can add in is Shopify. So you can connect your Shopify store with your QuickBooks store as well. Okay, so when you want to add in QuickBooks to your Shopify, you would want to go to your Shopify. Go to your apps. Okay, and then you want to visit the Shopify App Store. And you want to do a search for QuickBooks. Okay, here we go. And then we just need to install it. Okay, so I'm just going to pick the free version. So right now, I don't have that many orders that are on my Shopify. So I'm fine with just the 30. So it's not that difficult to actually record the transactions into the QuickBooks. But if you had all of your stuff on Shopify and you don't want to have to go through that manually, it might be worth it to pay the $10 or whatever a month to get it connected and to have it automatically pull over all your transactions. So the free version gives you 30 orders a month, which right now for me is fine. Okay. So I already know how I can quickly get things down and bring them over into my QuickBooks. So I just want to show you this as an option. So let's see, we want to just do sales. Probably gonna have to. So I want it to go there. Undeposited funds is fine. So the great thing is that it's going to show, no, let's put it, okay. Okay. All right. Okay. So we've finished our setup. I just let it know where I wanted these things to go. Okay. I'm going to go ahead and let it export. Okay, so now back on QuickBooks. Okay, so we have now brought in some of our Shopify revenue. So you can see it here. So remember, you have to go through and you have to pull these in. Okay. Okay, so here's all my sales. So those all look fine. Okay, so you can see there are multiple ways to bring in your sales and your transactions into QuickBooks so that you have more detail in it. So bringing it over from your bank is just going to bring things over as a single amount, and bringing them over from your different applications is going to bring in more detail. So if you want to know, who bought this thing from you, then if you bring the detail in, you can have it both in your QuickBooks and in your application. Doesn't mean you have to do it that way. It's just an option. Okay, so a couple of things that I wanted to tell you about. You want to make sure that you are working on this reports menu. Profit and loss is always a great one. You can customize it for specific dates. You can do quarter, weekly, monthly, yearly. You can do cash or accrual. Okay, so the difference between cash and accrual. So cash is just like it sounds. It's cash. I would say 98% of the people in here should be on cash basis. So cash basis is what you use when you report to the IRS. The IRS only cares when the money is spent. They don't care when it's related to, they only care when it's spent. If you put an expense on your credit card, the IRS considers that expense done right then when it is charged to the card, regardless of when it's paid. Okay, so that's an important distinction to understand. Accrual basis means that if you are going to be, so let's say that you ordered some ribbon and you're not going to be paying for it until you get the bill, which may be 30 days later, but you've already received the ribbon. So accrual is that you go ahead and record that expense because you've already received it. It happened in the current period. And the reason that that is good is because it helps you to see things as you're doing them. So you're matching your revenues with your expenses. So maybe you got that ribbon in and you immediately started selling it. Well, if you are on cash basis, because you haven't paid for it yet, you're getting the revenue, but you don't get the expense, okay? So accrual basis means that you record the expense when it happens and you record the income when it happens. So once you've received something, it has considered to be in your possession, you can go ahead and record it if you are on accrual basis. So it really just means that you're going to be matching things when you get them as opposed to when you pay for them. Okay. So this is a really important report that you need to understand. So you need to keep track of what your expenses are and remember what I told you earlier. So if you have a craft fair and you have craft fair income on here, if you have a category and you call it craft fair expense, then you can quickly see how you did on that craft fair. So that's a very important thing. So you do want to make sure you understand all of your expenses, you understand what your net income is. And you know, this is, I haven't imported all of my information because I really don't think you will want to watch all that. But this just gives you kind of an idea of how this works, of how QuickBooks works, and how you can keep track of all of your revenue and expenses. So it's really important. Okay, so taxes is also an important category that you need to understand how this works. Okay, so I don't have any sales that are recorded yet for February. So I don't have anything on my sales tax. However, if I go in here to my sales tax settings, if I go into my sales tax settings and I make my start date, let's do October 1st, 2018, and save that. Okay, and then go back into taxes. Okay, so see right here, it has calculated what I sold in October. So now I know, okay, this is the amount that I need to put in to my sales tax. So I would select file manually because I have to file mine on their online system. Okay, so I will be able to put my tax amount in here, the payment date, and the bank account that I used, and I will be able to record the payment. I can also just wait until it comes in from my bank and record it at that point. But it is a really good idea to record it against the sales tax so that it sees, okay, this is what you got and you paid that. And so it makes it a lot easier for you if you ever get audited. If you ever get audited, then you have all of these records with all of your transactions in it. And, you know, the IRS is not going to be able to come in and levy you with expenses that really aren't, well, they're not going to be able to come in and levy you with penalties for not paying your taxes when you can show that you clearly did. So the important thing is to remember that you're not going to get yourself in trouble as long as you record everything. If you record your expenses, they're really expenses that are related to your business. They're not being used personally. And you are recording your income from all sources. then you're not going to get in trouble. So you really do want to stay on the up and up, because it will come back to haunt you later if you don't. So I've seen many clients have problems because they didn't report all of their revenue. So they didn't record all of their revenue, and somebody reported them, or they took expenses that were really personal. And I can tell you, I've seen it happen. It really is not a good idea. You don't want to get yourself in trouble with the IRS or any other government agency. You just want to stay on the up and up and make sure you record everything appropriately. It really will help you in the long run. So in the next one, what we're going to do is we're going to look at how you reconcile to your bank. You really need to do it on QuickBooks, because it is a permanent record that you have reconciled to your bank and will be accepted by banks, the IRS, and so on and so forth. You never know. You might need to get a loan for your business later on. Let's say you wanted to open a brick and mortar, and keeping good records is going to be key.